Good evening, everybody. You realize today is the first day of October already? Somehow we've lost 6 months. You know, what we're going to that's kind of a good use of the American language. We're going to be kind of promoting our training session. It's coming up October 17th and 18th. And that's essentially what we call the Triple T training. And the reason I like to give this training is I was making good money, again, coming from being the worst investor in the world to at least starting to make money with candlesticks. And I was just happier than a pig in doo-doo that I was not losing the money I consistently did. And when candlesticks came along, I could visually see the areas that I was the buyer, which was always at the top, and when I was always panic selling at the bottom. Candlesticks turned me around 180 degrees. And I started making good money. But then one of my private training students, Rick Sadler, who now runs his own scalping website, trading room. He, after doing a private training session with me, a few weeks later he called back and said, put the 8 exponential, the T-line. We didn't call it the T-line at that time. We were trying to find a short term since we're going to use it quite often. So now I say, instead of making good money with candlestick signals, when you do the candlestick signals in combination with the specific signals and patterns and combine it with the T-line, now I'm making great money. It just completely solidifies your ability to analyze what's when a trend has actually reversed. So, Becky already has put up the link for our 2-day training. This is something where if you have learned candlestick signals, or at least acquainted with them, and you still don't seem to have all the facets put together where you're making money consistently, this is probably a good logical training to do. And I've looked at the weather report, and it's going to be cold, rainy, and sleety on that weekend, so you might as well sit inside, which you're not allowed out anyways, and do the training. And you'll get more benefit out of it than you can ever imagine. And that's the nice thing about candlestick charts for the signals. We know the signals work, or they wouldn't be around all this hundreds of years. What does the Triple T stand for? Oh, Bill, I don't know. Becky, Jim, what's the Triple T stand for? The T-line, the trigger. Oh, did you already put it in? Oh, there it is. Timing, trend analysis, and the T-line. So when you add all that together, you've got a very strong probability factor when you're analyzing a trend. Yeah, Jim, I was going to mention that too. Pink is just too light on a white background. Needs something macho, like dark gray or deep purple. Oh, anyways. Okay, so let's take a look at how we can use that information in our analysis of a trend. There's our signal in the Dow. tells us we should look for bullish confirmation, which would be a close above the T-line. There's our uptrend. Never could close below the T-line until that day. So that day right there should change our mental attitude toward having long positions on in the portfolio to getting ready to take profits on long positions that have reversed and adding short positions there. That's much better. All right, that's it. I can even read that. I'm colorblind. So here's a very logical combination. If you see a candlestick buy signal to close above the T-line, the probabilities, and this is a very important statement, the probabilities are extremely strong that you're in an uptrend. How come? What is the light green line? All right, let's go through them real quick. The 200 and the 50-day simple moving average, because everybody in the world uses those moving averages to make their decisions about their portfolio. We are not using them as one of our support and resistance indicators. We're using it to see what everybody else is doing at those levels. We're seeing what the investor sentiment is at the levels that everybody else is watching. I've also got the 34 EMA on here that works reasonably well. Why? Have no idea. Just works reasonably well. Now here's the important one that I could take everything off this chart except this T-line and I could trade very successfully with it. Just a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Then you've got the 3T line, which has two functions. One, the further away you move from the T-line, the more effective the 3T line is for telling you they're coming back to the T-line. And two, if you see a buy signal and a close above the T-line and the 3T line comes up, that's that more added confirmation that there's been a reversal. What does a blue candle? MB, I don't even see a blue candle. Where are you seeing a blue candle? If you're seeing a blue candle, you're more colorblind than I am. Yeah, the blue line is the 50-day simple moving average. Everywhere. You got the green, which is bullish. You got the red that is bearish. Or not bullish or bearish. You've got the green that says it opened here and closed above where it opened. The red is it opens here and closes below where it opened. Lots of the candles look blue. Is that right? This is actually blue? Many candles are blue. I don't have an answer to that. I'm just seeing red and green. They just switched. Oh, somebody's. I don't have the answer to that. All right, so blue's gone now. Okay. I don't know what happened. Maybe it's just candlestick magic. Okay. Yeah, let's like saying, what time is it when it's 13 o'clock? It's time to get a new clock. All right, so the NASDAQ. So, all right, so let me, not only using the T-line to tell you there's bullish confirmation, and we use a simple rule that we're in a uptrend as long as we see the index is trading above the T-line, which makes for a very simple, very simple analysis. You're in an uptrend. Now, we could also learn what the nature of that uptrend is. Notice today, the Dow opened up here and closed here. Even though it was up 35 points, it was below where it opened. That gives us an immediate visual perspective that maybe that wasn't a very strong day, even though the market was up 35 points. There was lots of selling going on. You add that, though, to the analysis of the NASDAQ, same scenario. Close above the T-line. You're above the T-line, and today the NASDAQ was up 160 points. So what's that tell us about the nature of this uptrend? One, it may be choppy, and two, it's probably going to be very sector/stock specific. So the advantage we have with candlestick signals is that we can, with simple scanning process, we can see which sector and which stocks are going to act the strongest. Yes, both gapped up, but that doesn't really mean anything. The fact that the Dow gapped up but then traded lower told you, yep, there wasn't a lot of follow-through. Deleted the thin green line. Oh, there it is. All right, I'm going to take a quick gander at December crude oil. Trading at around 38.71. Going to take a look at gold. Trying to start coming back up, which means some of the gold stocks are starting to act well. Soybeans had a big day yesterday. Yesterday. It was up like 29 cents, which is a huge move. And wheat also had a big, huge move and now backing off. All right, now let's before I forget, I've had a few members say, how do we get somebody to come in and see what you're teaching, and learning about candlestick signals without them having to join up? So we're doing a special right now. I'll let Becky put in the link. That if you've got friends that would like to come in for a week to see what we're doing, there you go. Thank you, Becky. Or if anybody in here is a non-member and would like to come in and see what we do during the day, we've got the chat room going on, the main chat room, which is very beneficial because it does two things for somebody learning candlesticks. One, it allows you to ask a lot of questions on stuff that you're not clear on, and there'll be a lot of people in there, as well as myself, that can answer those questions. And two, you've got a lot of experienced candlestick traders in there that will point out good, strong charts. Now, I always tell people a chat room probably has about 90% of the information is not going to be oriented toward what you're looking for or your trading. But there will be 10% that becomes very relevant. So not only do you have the benefit of learning how to use candlesticks a lot faster, using a lot of other people's experience, but also able to find or have good chart patterns pointed out so that you, even if you don't have a scanning technique set up or our scanning technique set up, you can find some very good trades. And if at worst, you don't have to trade them, but at least follow to see why those trades were, somebody pointed them out. Now, I put out 2 or 3 stock picks every day, not so that people have stock picks. Deleted the thin green line. No, it's right here. I don't know. Chris, I don't know what to tell you there. Delete the thin green line. I don't know why you want to delete it. Now I forgot what I was saying. Oh, we put out a 2-minute video each night for them in the members area, and with the recommendations, not so that you just have a recommendation, because that's what we want to teach people how to do their own scanning for, so they have their own supply of good trades based upon finding the best trade setups each day. But it's also as a training that I explain why those trades are good. Are your chart parameters equal, effective? Yes. These charts are what you call fractal. This could be, as you can see, this is the daily chart, and this is the 10-minute chart. They look exactly the same. The reason for that is the definition of candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. And that time frame could be 1 minute or 1 month, depending on the time frame or the time you want to hold positions. But it's you can use it in two what am I saying? It acts as the 3T line acts as a added little confirmation that when it comes up through the T line after a candlestick buy signal through the T line, this provides extra confirmation. Then the further away you get from the T line, the more effective the 3T line becomes. And we can do a training session on that one night. So here's kind of the basics of the T line in conjunction with candlestick signals and patterns. We recommended Tupperware right in here because you could see the slow curve 5-pan bottom. You could stay long, but it looked a little bit toppy. We started taking profits. Then we had a bearish engulfing signal that closed below the T line. And remember what I said earlier, that if you close below the T line, the probabilities are extremely strong you're going to be in a downtrend. Now we're sitting right on the 34, and look what type of signal we're getting. There's our morning star signal with stochastics in the oversold area. So some people say, should we be waiting for it to close above the T line? And the answer is no. If you're in the oversold area and you're starting to see a candlestick buy signal and you're short, take that money, take those profits, and go find another chart that looks like this or a chart that looks like this. Yeah, so Cindy, that's a very good point. As you can see, I don't have a whole lot on my charts. Again, I could take everything off except the signals. Remember, the most important factor of candlestick analysis is the graphics of a candlestick signal or pattern. You could take everything off your chart and make very good money just trading those. But if you add the T line, it just enhances that confirmation that there's been a change of environment. If I was watching this one, I wouldn't buy until you see it close back up above the T line. That's when your probabilities change dramatically. You could see when it was time to buy, VRA, Vera Bradley. You could see when it was time to close out and go short. You can see what happened down here in the oversold area. There's a very simple rule that if you see a doji in the oversold area, if you're thinking about covering your short, very simple. If they come back up through the high of the doji, that's pretty much telling you they're moving in the direction of how they opened after the doji rule. That's where you close out your position. This one is much closer to the T line, obviously, in the 200. But if this opened positive, that would be a good time to be buying. Okay. I'm going to do this. A lot of the stocks that we're going to look at right now are the ones that we're already in. And the reason for that is because we're in what we hope are the best charts. We recommended, and this is where the entry strategy becomes very effective, we recommended MRNS today if it traded above 13. Well, it opened and it traded all day long down here. Sorry if I missed it. Why do we change the EMA from 9 to 8? Oh, I don't know whether we've ever had it at 9. We've always used 8, exponential moving average. And the 34 is an EMA. Now, remember, the most important factor on the chart is the patterns and the signals. Everything else is just a confirming indicator. These are the ones I use, the 200 and the 50, because everybody in the world uses those to make their decisions. The 34 works extremely well, and the T-line is essential for dramatically improving your profitability. Now, here's another thing that is very enlightening about the T-line. Nobody has the T-line on their charts, or statistically, nobody has the T-line. But look where it bottomed out on this chart today. Right smack dab on the T-line. What you're going to find, and I tell people, don't take my word for it. Throw it on your chart. And one thing I tell people is because now I forgot what I was saying. I was reading what Jay was saying. Dang Jiminy Christmas, what was I saying? Oh, because nobody has the T-line on their chart, you'd be surprised how often the support of any of our trading is smack dab on the T-line. Now, it's not because everybody's watching to see what it does at the T-line, because nobody has the T-line on their charts. This acts as a very, very strong confirmation that the bulls, oh, did they pass it? What about, let's see. They finally passed it. All right, that should be a pop. What about the 20 EMA? That's my next, Diego, that's my next comment. The most important factor is the signals and patterns. Then you can put whatever you want on the chart. If it works, keep it there. If it doesn't work, take it back off. Some people put the 20 on, or you can put the 34 and the 20 on. Oh, it's past the, the house did that. All right. All right. Then. Okay, thank you. All right. Passed the house, but not the Senate. So if somebody says, put the XYZ indicator on your chart, you put it on. Again, you're still knowing that the signals and patterns are very strong, compelling reversal signals. Everything else is a confirmation. If you put something on and it doesn't seem to work, take it back off. I've been using these techniques to time call option sales on some stocks that I had bought before I began following the strategy, and they are gold. All right. Green candle on. All right. I can probably take a gander here. Well, it looks like the YMs are still negative 27, so I don't know what that means. We'll take a gander here real quick. And down 29, so it doesn't seem to be affecting the futures all that much. Okay, so, geez, we're already way behind and we haven't even gotten started. So here's the reasons we are buying specific stocks. There's the bobble breakout, a J-hook pattern. Bobble breakout is more specific. It failed here and broke back through here on a J-hook pattern. And notice what happened right here at the T-line. The T-line still acted as a support level. How long do we hold this trend? Lots of indecision here, but what was the one element that didn't occur? They didn't close it back below the T-line. So obviously very good profitability on this one. DQ is one that's been working very well. Kind of your little J-hook pattern off the 50, heading for what target? Why is this? I can't draw a straight line. That's just... Right, coming up to at least that level. So here's what we call 2 plus 2, or convergence analysis. Pull back, pull back, pull back. There is our scoop pattern. Looks like a flat handle with a scoop. And how did this start off? With some doji gap ups, creating the scoop. And then notice our doji sandwich right here at the breakout level. That made it very simple that even if you hadn't bought it on this day, our doji rule said if it opened positive, it was going to trade positive. And if it opened positive and traded positive, the probabilities were that this candle right here would probably be the same magnitude as this candle right here, creating that doji sandwich with your little doji sandwiched in between. And because we know what the result is after a doji sandwich, more upside, that just adds to the credibility that this scoop pattern breakout is on its way. Sean, you can make it as big or as small as you want. I usually make my charts big enough where I can see what's going on here and then see what has happened in the recent past. You can make it smaller or bigger, whatever your eyes are comfortable with. Now, if I was looking at this and say, well, I've got a scoop pattern, where's my likely target? Now I can start scanning back and see what's this chart look like. Well, it looks like right now it might be in a uptrending channel, and here's my potential target. So I use this, whoops, wrong way, use this time frame as kind of my, just so I can see what's happening over here. You buy it now? Yeah, I wouldn't be afraid to be buying it still. Now, where was the place to buy it? Probably right in here, but it's still buyable. You're not in the overbought area. You're in a scoop pattern slingshot effect. So anytime I see that scoop pattern, I have a little scoop pattern right here with a morning star signal, I'm expecting the slingshot effect. That's not what I wanted to do. Oh, this is kind of your little scoop pattern. This is what you expect coming out the other side. So why do we look for these? Because the probabilities of seeing that pattern set up is usually going to create a very strong price move. What's the potential target? I don't know. What's the potential target on this scoop pattern breakout? Very simple. You stay long until you see a sell signal. How do you find out the target price again? On whatever you might be looking at that everybody else would be looking at. So a lot of people ask, well, do you use trend lines? Do you use support and resistance? Don't use them. You're just going to be a little bit more diligent to watch to see what happens when it gets to an area that everybody else is watching. No, I'm way behind. So anytime we see this type of setup where they've pulled it back, wave 1, wave 2, buy signals going into wave 3. So our SPWR is working well. We did a VYA. We recommended EHTH because of the J-hook pattern. I think I've got BNTX in here somewhere. If not, just remind me after I tell Jim to do the double line. So, wave 1, wave 2, wave 3, what do we expect out of wave 3? About the same magnitude as wave 1, which means that puts you up here in the gap area. That makes it pretty likely they could go up to the 200-day moving average. Again, anytime we see a pattern setup, especially a J-hook, we know that wave 1 and wave 3 are probably going to be about the same magnitude. So look at our bobble breakout, which is a more defined J-hook pattern. When they come out, this is an extremely high probability trade setup. If this is going into wave 3, same as wave 1, what's it telling us? More than likely, they're going to fill this gap up here. EHTH, yes. Because if this is wave 1 and wave 3 is just broken out, there's going to be more upside. What you really want to do, though, is learn to say, oh, I can see this is setting up. I'm buying on this day, so that you're taking advantage of this 6-8% move the next day. What we're essentially doing, because we know that investor sentiment works the same way time after time, we're trying to buy at the appropriate time. We started buying this one today. Why? Because there's your kind of your J-hook pattern. There's your doji sandwich. We knew when it opened positive today, it was probably going to trade positive with the same magnitude of that candle being the same as that candle, which already put us into a profitable position. Do you show new members exactly how to find trade setups using scanning software and how to program? Yes. That's the whole point of all this, Diego, is that this is not a stock picking website. This is a stock training website. So when I put out 2 or 3 stock picks every day, that's just so that if you haven't gotten your scanning techniques that we teach people how to do down to where you're confident, at least you've got a few to start with to see why those work, so that when you start doing your own scans, you can start analyzing to see which ones should be the best ones. So the reason I tell people that we want to teach people how to do their own scans is I may put out 3 stock picks and none of them execute correctly. Well, instead of just sitting there without any alternatives, if you've done your own scans, you might have found 4, 5, 6, 7 others that look good that you can go back to and say, oh, this one's confirming, I'll buy that one. If you have a big up day and then a doji, and you're expecting a doji sandwich, and you buy it on positive trading, is a stop below the bottom of the body of the doji or the bottom of the wick? Either or. Probably as a safety stop, you use the bottom of the wick. At the end of the day, if it closes below the doji, you probably want to close it out. Okay, so what do we expect here? Wave 1, wave 3, probably bringing us up into this range. This is not rocket science. This is basically utilizing the information the Japanese rice traders have provided for us for hundreds of years of what human nature normally does. Another J-hook pattern on our HIB recommendation. If you closed it out here, you were buying it back in here because it was setting up as a J-hook pattern. PIEX, another J-hook pattern setting up. It almost became, yesterday we recommended this, that if it opened positive and traded positive, it was doing a J-hook. It opened and immediately traded lower. What'd that tell us? The bulls weren't there. We didn't get in. But today's positive trading told us what? That this was just consolidation. If you're buying this one, where's the logical place to be buying? If it trades up above this level, that tells us our J-hook pattern is still in progress. Fly did the same scenario. Gapped up off a left-right combo. Left-right combo is your doji followed by a bullish engulfing signal. Very strong prospects of reversal. You can see kind of the scoop pattern. This one didn't execute. Now it may be bought if it trades above here, because what's that telling you? The scoop pattern, after breaking out through the 50, came back, and what do they usually do? They see if the resistance level acts as support. When it acts as support, everybody that's following the stock, what do they know? The 50-day moving average is acting as support. We can see right away they're all coming back in because it's supporting. That usually gives you a very strong price move. DraftKings. This is what we call the classic pattern. Big fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. Pulls back to where? Right back to the T-line and does a J-hook pattern. This is what we call the classic pattern, because what is the prerequisite of a J-hook pattern? A strong price move. What is the expectation coming out of a fry pan bottom? A strong price move. So this is usually the correct combination. A fry pan bottom breakout, consolidation, and then the continuation of that pattern. So you can see the J-hook pattern. And what was the other additional piece of evidence? They couldn't close it below the T-line. You stay long. How long do you think this one's going to go up? Wave 1, wave 3, probably bringing you up into this range. So after a breakout, you wait for support. If you're right there at the 50, which one were we doing? Fly. Fly, when it broke through the 50, which you can see had been acting as a resistance level for quite a while. It's not that it will do that, but quite often it will. They come back and see if the breakout of the resistance level is now going to act as support. If it had opened positive and traded positive, we would have been buying immediately. The fact that it opened and traded lower told us that they're coming back to test the 50. If they support, now they're heading back up. Oh, did they? All right, thank you, Will. I don't know if that, when did they do that? Is that today or after hours? Or is that a while back? Yeah, we're not, the waves aren't Elliott wave. Because I'm a swing trader. I'm not going to be in a position long enough to see if it's wave 1, wave 2, wave 3. So if this is wave 1, this is wave 2, this is wave 3. If it pulls back, this is wave 1, this is wave 2, looking for wave 3. Announced this morning? Okay. All right, thank you. SGMS was recommended the other day because of its J-hook type pattern. So how long do we hold on to this one? As long as it doesn't close below the T-line. SRNE also has a little J-hook pattern, and it traded lower today, but here's the one thing that we can be more analytical of is look where it closed. It closed above where it opened after hitting the T-line. Now remember, there's two major factors here in this analysis. One, it's supported on the T-line, the natural support level that nobody has on their chart. And two, it traded above where it opened. What did that tell you? There was still buying going on. So the fact that they used the T-line as support and there was still some buying after the open, that tells you this uptrend is more than likely still in progress. Oh, I'm only going to jump to this just because it's kind of a fry pan bottom. But I would still want to see it get through this level to tell you you're not in this sideways. Okay. Oh, who's Sandra? Oh, we did Tupperware. We recommended shorting copper because there's your left-right combo. There's your bearish doji sandwich, which kind of, remember our McMuffin. Where is our McMuffin? Our McMuffin is a morning star signal followed by a doji sandwich, or your morning sandwich, which is a McMuffin. The opposite, I can't remember which one we just did to show the opposite. Oh, was it COG? An evening star signal followed by a bearish doji sandwich, or your evening sandwich, which we call a Dagwood. But that combination tells you there's a strong force to the downside. So how long do you stay short on this one? Until you see a buy signal. When's a buy signal likely to occur? When you're now in the oversold area. You get to watch a little bit more you watch a little bit more diligently because look, you're in the oversold area and you're starting to move a good distance away from the T-line. Okay, so that was COG. Blink. Ruh-roh. I don't know where that went. There's a blink out there in the universe. There's kind of your J-hook pattern off the T-line, back up through the 50, fry pan bottom, and notice not only are they staying above the T-line, but they're still staying above the 3 T-line, which means there's still a lot of bullish force. Raymond, sometimes I will stay overnight. Trying to think. On something like this, if I think I'm in a strong uptrend, I might just hold the position until I see a sell signal. Unfortunately, in situations like this, when you're starting to get some whipsaw, I usually wouldn't hold it overnight. Because Dagwood is so overstuffed it topples all over the table. That's right. And Penn was another one. You can see the left-right combo, J-hook pattern setup. So now what can we anticipate from this chart? You're above the T line. You only had one day below the T line, came right back up, and you pretty much have used the T line as a support all the way up. So now what are we watching? If it breaks out through this level, we probably got another good strong wave to the upside. I forgot Beyond Meat. Beyond Meat, you can see the little J-hook pattern breaking out through this level right here. You've got kind of a fry pan bottom, J-hook pattern, and, this is why we had a trend. Oh, that's not what I wanted to do. You can see the fry pan bottom here. And where was the breakout level? Right there. So now you can see what's happened. Yesterday it looked a little bit squeamish, that they might not go up through the breakout level. So there's your shooting star. Had this opened lower and started trading lower, would have closed out any long positions. Because that shooting star right here at the resistance level where the pattern started would have told us this is a resistance level, not a breakout level. Today's positive trading gave us a little bit more confidence that this is wave 1, wave 2, wave 3 should be up a little bit more yet, which means they've definitely broken out through this level. All right. I'm going to go through some of these real quick because you'll be seeing why we're buying. There's what we call the breakout, like your slow curve. There's your 45 degree, very simple T-line rule. You see a 45 degree, you stay long until you see a sell signal. FLGT, another kind of fry pan bottom, consolidation, and notice what they've done on the consolidation. They haven't been able to close below the T-line. Where do you start counting wave 1? It's not really that specific. If that's wave 1, that might be the same magnitude for wave 3. Oh, no, we shouldn't. No, save these until that is kind of a fry pan bottom on the NTX. All right, and we have a position on this one. There's wave 1, wave 2, left-right combo, wave 3. Where are we? We're starting to get up in the overbought area. Kind of watching to see what happens at the same magnitude of wave 3. Where do you put your stops for entries? Meaning a buy stop. If I was buying this one, I'd be buying on positive trading the next day. Now, I don't put stops in on the buy side because I'm usually sitting here. But if I had to drive to work, I might say, all right, if this comes up through X, I want to start buying. Stop loss, also very simple, but that's a whole training session. But I always tell people, everybody tells you to cut your losses short and let your profits run, but they never tell you in the 40-some-odd years, I hate to say I've done that long, but I've been investing. I've never heard anybody tell you how you cut your losses short and let your profits run. It's very simple with the logic from the Japanese rice traders, which is, if this is my buy signal and I'm buying, where do I not want to see it close? Well, if it closes back below the halfway point of the candle that told us the buyers were in control, it means the sellers are still in control. You close out your position. If I'm in an uptrend, what's my next criteria? I stay long until I see a sell signal and a close back below the T-line. So if this was trading up this day, I might come right in here and put a stop right there at the T-line. Detail, another one that has come up through the 50. It's come back using the 50 as support. Now we want to definitely see this open positive. If it does, it's probably heading for the 200-day moving average. Roku, you can see the J-hook type pattern. Notice the trend channel. Comes up to the top of the channel, bottom of the channel, top of the channel, bottom of the channel, top of the channel. Whoops, came right back to the T line and started back up. What does that kind of imply? Kind of implies that there's going to be enough juice to break you out of this trend channel and go much higher. Tesla did this wedge breakout. I don't know where these things come from, but you can see the downtrend. Kind of the top of the wedge. Here's kind of your bottom of the wedge. But they broke out to the upside. This is what we always tell people when we're doing our top rank signals and patterns. What we're telling people is there is 14, 16 very strong price patterns. That's the combination of the candlestick signals and the patterns. A lot of people say, well, there's so many good trades. How do we remember all these? And we always advocate learn 3 or 4 and become an expert at those. That way you're not at the mercy of all the rhetoric that goes on the financial news stations, or somebody saying, oh, look at XYZ, it's breaking out, or Kramer saying you want to buy this stock. You can analyze exactly what's happening, what's going on in that price move. Now you're not at the whim. You're basically at control of your own investment decisions, and you've taken the emotions out of your trading, which is what I've tried to do all my life, because being the worst investor in the world, I knew it was because every time I put on a trade, it was because of emotions. Which, again, is usually, this is why candlestick signals are so effective, because they are graphically depicting what's going on in investor sentiment and their emotions, which are usually wrong. Where do most people buy? They buy at the top. Where do most people sell? Again, they panic sell at the bottom. Real quick on the biggies. Netflix broke out of this slow fry pan bottom breakout. Probably has more upside, at least back up to this level. Amazon was having a hard time getting through the 50 today, but it finally came back up and got through. Let's get rid of that. So you can see that we're obviously in uptrends as long as these stocks stay above the T line. Zoom, you just stay long as this stays above the T line. Apple, still above the T line. So maybe you don't trade some of these, but at least if you can see the biggies are being bought, that means there's confidence in the overall market. So if you find a chart that looks good, it has a strong buy signal, and it's not one of the biggies, it's probably going to be confirming because the whole market is going to be confirming. So we can use that to our advantage, that if we see situations like these wedge breakouts, we can look at stocks that have a wedge breakout. Let's do this. That's what we were looking at over here on ARWR. If this opens positive, more than likely you've got another strong price move ready. Again, when I say more than likely, the probabilities of seeing what everybody else is watching, and we can see immediately there's a positive signal, that means the probabilities of being in a good, strong trade are extremely strong in our favor. Same thing on LVGO. A wedge. breakout. So these are just situations where you're basically putting the probabilities in your favor based upon a pattern breakout. A slow curve, more than likely there's more upside on VVPR. Ballard Power, same scenario. Kind of a wedge breaking out to the upside. And it's doing it right here off the 50. We've been in VVPR for a while, or not for a while. We started buying here on the J hook, closed it back out. Now it's getting ready to be bought again. The biggies, yes. Well, it's kind of a mixture of will that there is the NPX. That if the biggies are acting strong, that means probably the whole market is acting strong. Cardiff, look at the big cradle type breakout that started this uptrend. And so how long do you stay in this one? As long as you stay above the T line. Now, this is what puts you in situations where you have the potential of big percent moves. Oh, keep losing my place here. CVGI. There's your J-hook pattern. Still in an uptrend. AAXN. There's kind of there's your left-right combo. There's your double doji. Notice how they consolidated right back to the T-line. But what does a doji tell you? Indecision between the bulls and the bears. So when it pulls back, what are we getting? An indecisive pullback. That tells you if everything else looks like you're in an uptrend, you get ready to buy it back on the next, or buy it on the next positive trading. Vine, there's your best friend signal. A doji followed by a gap up. Then it came right up here to the resistance level. And when they gap through the resistance level, what's that tell you? What's that tell you about the resistance level? It's not there anymore. They're still buying this with great enthusiasm. Oh, I think Trill was another one that was, what was I looking at? Trill. Look at all the dojis. Doji, bullish left-right combo. What do you got setting up? There's your next wave of a J-hook pattern. Uber. There's your bullish engulfing, right smack dab off the 50. Now, why do I say right smack dab off the 50? Because we can see graphically what everybody's decision was when it came back to the 50. You can pretty much imagine or guesstimate that if there's a bunch of institutions ready to buy, they were waiting to see if it was going to support at the 50. We could see what their decisions were at that level. So that J-hook pattern is setting up. There's another TCS container store. There's another J-hook pattern setting up. GT, Goodyear. There's your best friend gap up. There's your best friend gap up. There's a gap right there to fill. There's another gap right there to fill. Where's your next likely target? Probably back up toward the 50-day moving average. RMBL, there's your bullish reversal. What do you got going on? Wave 1, wave 2, and where do they start buying? Right smack dab off the 50 with a candlestick buy signal. Trying to go through these real quick. They're all good signals. Jounce, another one that could be bought on positive trading tomorrow. Etsy. Nice fry pan bottom. There's your double doji. Anytime you see a double doji, get ready to buy on positive trading the next day. There's your double doji. Your uptrend, what's it telling you about your uptrend? It's still in progress because they haven't been able to close this below the T line. And FRH, oh man, what is that? Oh, because I can't read my own handwriting. FRTH, Farfetch. There's your Harami gap up. There's your double doji. There's your wave 3 probability. All right, remember our scoop pattern usually produces this type of result. So when you're looking at something like this, that was the expected result. There's your morning star signal, which acts like a mini scoop. What was the symbol before Etsy? Oh, Jounce. JNCE. So the reason that you want to buy the patterns is because not only are the probabilities of it heading in the right direction, but the magnitude of coming out of a fry pan bottom is usually going to create a much bigger profit than just merely holding a uptrending stock during an uptrend. Kind of a fry pan bottom and they broke out on trade desk, more than likely there's still going to be a lot more upside. So using the T-line in conjunction with the signals just dramatically improves your insight as to what's going on in investor sentiment. If you just take for fact one simple aspect of a candlestick chart, that as long as you're above the T-line, the probabilities are extremely strong, you're going to stay in an uptrend. If you see a candlestick sell signal and a close below the T-line, the probabilities are pretty strong that it's going to be heading down. Okay, so with that, are there any general questions on candlesticks? Just a reminder that if you got people that you would like to have them come in and try everything for a week, we've got this promo that there's 3 different weeks they can come in. Becky is about ready to, there it is, that one. What is your thinking process to determine if you will buy stock or buy options? That's up to each individual. If you're like to trade options, you're using the analysis of the stock chart to decide whether to buy that stock, but you're buying that stock through the use of options. Now, if I'm looking at a $240 stock, more than likely I'm going to look at the options. If I've got a $7 stock, more than likely I'll buy the stock. Now, it's not necessary for the 3 moving average lines to be pointing in the same direction. Remember what the most important factor is on a candlestick chart. It's the signal itself. Everything else is just merely a confirmation. What's the difference between a scoop and a J-hook? Didn't we kind of show that? Usually you have a relatively flat handle before the scoop. You usually have a strong price move before the J-hook. Hold on to your individual. Tell Jim to do a double line and pray. If as late as we're running tonight, you probably want to hold it to 1. If you see a buy signal, Let's see if I can find one. Well, let's say this is my buy signal. That's not a good one. Let's say that's my buy signal. And the next day it opens positive and I'm buying. And then it closes more than halfway down this candle. Remember, if this was the buy signal that told us the bulls are in control, if the bears can close it more than halfway down that candle, the bears are still in control. Close it right back out. I would guesstimate that 70% of my trades work. Now, some of them work by 0.3%, some of them by 300%. But the other side of that coin is 30% of my trades probably aren't going to work. So when I see something that I got into and it didn't work, say I was buying on this day and it closed back below the T line, I just tell myself, oh, that one didn't work. I don't let that eat into my ego or my emotions. Now that I've realized that probably 1/3 of my trades aren't going to work, I'm going to close those out quick so I can find a trade that has a 70% probability of working. What do you think of a doji? The doji, we do sessions on the dynamic doji by itself. It's the most recognized signal, and it's the most illustrative as far as telling you what's going on in investor sentiment. After a signal, always wait for confirmation for entry. Don't buy on pullback because it's not confirming signal. Right, don't buy on a pullback because that means that the bulls aren't there. That's the wrong thing to be doing. What do you think of dojis? Oh, because it doesn't matter today. Let's see if I can bring up. Hit the wrong one. Where are your stochastics? They're heading up. So all that means is this was just an indecisive day, but you're still in an uptrend. So remember, a signal is not a signal unless it's occurring in the right conditions of your trend. Do these lines work? Yes. You could be looking at a 1-minute chart, a 10-minute chart, a 30-minute chart. They all look exactly the same. But watch the pullback for the development. Well, if I see something pulling back, let me see if I can find something to illustrate. That one didn't work. If I can see that this is a failure and I'm taking profits because it's pulling back, it's not that I'm going to hold on to it to see if it's going to do a J-hook. I'm going to close it out. Then when I start seeing it's doing a J-hook, I can always come back in. All right. What priority of importance do you do in the indicators? My top priority is the signals and patterns themselves. Then the stochastics. Where are we occurring? Common sense from the Japanese rice traders say, if you see a candlestick buy signal in the oversold area, more than likely you're going to see an uptrend. If you see a candlestick buy signal in the overbought area, it doesn't mean very much. Same scenario. If you see a candlestick sell signal in the overbought area, look for a downtrend. If you see a candlestick sell signal in the oversold area, it doesn't mean very much. On EHTH, how would you have seen the drop? This drop or this drop? You wouldn't. But you might not have been in over here. It might not have been a chart that you would have gotten in. However, if you were in it, there's going to be times when you have moves like this. And it's not that you would have been able to figure out how not to be in it. It's more, what do you do if you are in it? So if I see something like that, what's the first thing you should be doing? If you were long, what were you expecting? You were expecting this direction. If they gap it down, is that in your expectation? And if the answer was no, you close it out immediately. As soon as you close it out, you don't have your emotions boggled up saying, oh man, is it going to come up? Is it going to let me out? Should I get out here? Should I get out here? You're out, and now you can make a decision of what to do. EHTH 5 days ago, was it a kicker signal? 1, 2, 3, 4, 5. No kicker signals in here. No. Whoops, sorry. This was a kicker signal. Yes. A bullish kicker signal followed by a bullish engulfing. That was setting up for your bobble breakout. So if you know what signals and patterns to be looking at, if you've got a kicker signal and a left-right combo and you're breaking out through here, what do you expect? You expect more upside because of the J-hook pattern expectation. In the left-right combo, are your stop losses stay below the doji? Yeah, I'm trying to figure out. Yeah, you wouldn't want to see it come back and close below the doji. That would tell you that you didn't have a bullish engulfing signal. Okay. So I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. I'll try to do these quick. So remember, I tell people, if you've got kids or nieces, nephews, or people that you know that should be learning how to trade, my suggestion, and this is not because I trade candlesticks, but if I had to do it all over again, even as a stockbroker with Kidder, Peabody, Cowan, and Oppenheimer, I would suggest everybody learn the common sense built into candlestick signals, because that cuts through all the rhetoric. I can remember so often that they would recommend a stock at Kidder Peabody because the management was good, their earnings looked like they were improving, blah, 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 blah. That had nothing to do with what made a price move. What we're looking for is, what is investor sentiment telling us about that price move? You could buy this one on positive trading tomorrow, yes. CBAT. That one you could trade. I mean, you're trading it because it basically is bounced up off the T-line. So you could buy on strength. If I was buying on positive trading tomorrow, I'd set a stop right here. I wouldn't want to see it come back down through that level. Workhorse, consolidated. It started back up. It definitely has to open positive tomorrow, the doji rule, to stay in it. If it opens lower, close it out, because now you're probably in a wedge. NVIDIA, you stay long, use the T-line as your stop. Trill, you can get ready to buy this one on positive trading. Amazon, you can get ready to buy this one on positive trading. They're all staying above the T-line, and they're actually use the 50 as a support. Work. Another one you can buy. It's not a great chart because you don't have really any major direction. I would be very cautious of if it gets to the 50 to see if it can get through that area. It's just not a good chart because doesn't have any great direction. F-Fly, you could be buying this one on positive trading because it would be telling you it's breaking out through this level. is Lizzie. DJ, am I looking at this right? Lizi. Oh, that one. Long-legged doji. I'd be ready to buy this one on positive trading tomorrow. Oh boy. Both just the same. Probably more apt to buy this one because of the cradle type pattern. D-Dog broke out through this level. I'd still be a buyer on strength with the anticipation that you're in a 45 degree. Is this gold? Is in Barracks Gold? Nothing there. So if you're looking at gold, it's trying to do kind of a scoop pattern. I'd think it's going to come back up and test the 50 and then see if it breaks through that level. Daku, you can buy this one, but it's not a great trending chart. PayPal, that one's got more of a kind of a bottoming action set up. Did I do D-Dog? Well, I did. Gold. Morgan Stanley, nothing. Would not be long or short this one. No direction. And Yelp, that one you can buy, but also not a very good dynamic chart move. You got to watch to see what it does at the 34 because that's that little downtrend. So not a great chart. CrowdStrike still in an uptrend. You can still buy this one. Advanced Micro, there's a double doji today. You could still be buying this one. Riot, nothing. Would not be in that one at all. First of all, you can't short it unless you shorted it a long time ago because it's below the $5 level. Overstock, you can get ready to buy if this opens positive. Nail, stay long on this one. Home Depot, and not anything major. Lowe's, not anything major. But Toll Brothers, still in an uptrend. And Beazer Home. That one's at the breakout point. You can still buy this one on positive trading with the anticipation it's coming back up to the top of the channel. XSD, stay long. Wouldn't necessarily be a buyer here, but if I was long, I'd stay long. Microsoft, you can buy it. It's just not a very good trader because it's so big. An institutional trader. CLDX has to open positive. I'd have a sell stop set below maybe this level right here. This one, let's make this big enough where we can see it. This one definitely needs to open positive to continue this fry pan bottom breakout. All right, thank you, Roy. Didn't do it because I was any great writer. I just wrote what was working for me. CLSK needs to kind of a wedge formation right now. It needs to, there's your doji. It's going to move in the direction of how they open after the doji tomorrow. That's a nice kind of fry pan bottom with your little bullish flutter kicker. Now kind of a doji sandwich setup. I wouldn't be afraid to be buying this one on positive trading. And this one, all you can do is stay long. I wouldn't be a buyer of it until it breaks out through this level. Zeus, fry pan bottom. You can still buy this one. LGIH. You're right at the breakout level on this one. You can buy on positive trading tomorrow. True, nothing major there until they can get up through this level. Trying to do kind of a cup and handle. AMD did the bullish flutter kicker in the fry pan bottom. It can still be bought. The juniors in the gold area, nothing yet. Want to see what they do with this doji right here at the T line, but not a real dynamic chart yet, even though the gold is starting to work higher. Workday, kind of all you can do here. I wouldn't be a buyer of this one. If I was long, I would just stay long using the T line as a stop. No, this is not a kicker signal. It's got a little inverted hammer, but nothing that I would get excited about on this one. And it still needs to get up above the T line. Kroger has kind of gone dead. You can see that the overall trend of this one is not going anywhere. Kroger had a good run a few years back where it ran up big, but right now I probably wouldn't be long or short on Kroger. Just not enough, price action. Logitech, that one is a junky chart. And since you can't tell what it's going to do, I would not be long or short. If you happen to be in it, just get out of it and move to something where you can analyze what it's doing. Square, right at the breakout level. Stay long on this one. Will we receive a link for a recording of this webinar so we can review the material? Yes, I think so. If you registered, you'll get the recording. If not, just email Abraham. Let's see, link today's recording. Jim, you're back to pink. A lot better in blue. Pfizer, nothing. No direction. I'd be someplace else. And the reason I say that is if you've got a chart that doesn't look good, there are 9,500 trading entities out there, and there's going to be on even a bad day, there's going to be a dozen good bullish charts. There's going to be a dozen good bearish charts. So if you've got one that doesn't look good, you're always going to be able to find something where you can analyze what the investor sentiment is doing. What was this? Facebook. You just stay long on this one. I'll try to find you a flutter kicker here, Connie. Apple, just stay long. NIO had a good breakout. I'd still be a buyer of this, especially if it came up through this level, putting you into wave 3. CLDR, nothing right now. Just no direction. STM, that one broke out. Looks like it must be it's awfully choppy, but I would suspect it continuing along that trajectory. Did you tell you? There's a description of a flutter kicker, Carol, right below your question. And Walmart, not a very great trader, but you can see the fry pan bottom, and you can see the see where the potential target is. So it's probably a good spread. Jim, I think we did Pfizer already. Nothing. That's not a good looking chart. That's a chart that's not going anywhere. I was reading your blue and green. I can see a heck of a lot better than the pink. I've got to strain my eyes to see the pink. Abercrombie Fitch, that looks like a Morningstar signal back up above the T line. If it breaks this level, wave 1, wave 2, going into wave 3. MN, you can buy this, just make sure your volume is good. Johnson & Johnson, nothing there either. Sideways, that's just not a good chart. Marna, nothing there either. Now, they've come up through the 50. There's using the 50 as support. If it starts trading positive from here, then you can start buying it because everybody will see that it is or use the 50 as support. Space, you can get ready to buy this. Notice where they pulled back yesterday. After coming up through the resistance level, they pulled right back to the resistance and buying. There's a gap to fill right up here. All right, we did mRNA, Maxar. Maxar came up, but it's still not a great chart. That's not a real true buy signal. Again, I wouldn't be going after this one. If you like it, you can be buying it. It just doesn't have a strong reversal signal. The semiconductors, you stay long. ENPH, stay long. It's broken out through this level. Shows you you're in the next wave to the upside. Sedge. Wow. Another of them is broken out. Wouldn't be buying it here, but if I was long, I'd stay long. Okay, Barracks Gold was not really anything dynamic. If you like it, I'd be more apt to buy it if they can get up through the 50-day moving average. Right now, it's not showing a whole lot of strength, even though you did have a piercing signal down here. Zoom was holding up above the T line with a little inverted hammer. You can still buy this one on positive trading. Sono, when we recommended it today, was based upon the bobble breakout. Stay long. I would suspect at least coming up here to fill this gap. Oh, no, that was Sunday, SP. That was, thank you. And yes, we did TSC or TCS, J-hook type pattern. All right, everybody. Still lots of good trade setups. We will probably be recommending apps on the bullish doji sandwich positive breakout tomorrow. I'm trying to think of which other ones look good, but I forget. Oh, HIB. Unfortunately, it looks exactly the same as apps, but it's got a high probability of heading higher. I was trying to think of which ones were there was a best friend signal, and I can't remember which one it was. Was it Goodyear? Best friend gap up. All right, everybody. Remember, if you've got people that want to come try the session for a week in October 17th and 18th. It's probably going to be the most, information-filled, comprehensive training where you're combining the T-line and the candlestick signals and patterns. A 2-day session. All right, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you